And we are back. What's up, guys? John Johnson, Johnson Signature Group, Exit Platinum Realty, coming to you for another episode of the Real Estate Keys with Mr. Joseph Falla. Joe, what's up?
Hey everybody, Joe from Joe Does Mortgages. How are you doing? Hope everyone had a great and blessed weekend. Hope your team won. I hope the team you don't like lost. And basketball is around the corner.
Go Eagles, go Eagles, go Eagles, fly. Okay, all right, guys.
Listen, man, we don't want to lose people here.
Oh, all good. It's all good. But anyway, another episode of Real Estate Keys. And we are going to focus on reverse mortgages, right? Reverse mortgages. So, Joe, I want you to kind of walk us through reverse mortgages,
Absolutely.
what
But
rates
first,
and all that other good
everyone's
stuff.
favorite part of the show, the rates. The rates.
Uh,
So as we can see here, we're pretty much still in the same ballpark that we were last week. Your 30-year fixed loans, you're looking at a 6.69. This is your 15-year. These are your jumbo loans. These are your ARMs. Here's your our most favorite prize loan, your FHA, and these are also what we are looking at, VA loans. Another thing that I noticed that's down here is the 30-year UMBS. Um, this thing here pretty much gauges where the interest rates are and why they are where they are. It's sort of like your stock market, right? So just to make it simple, as we go forward, I'm going to show you guys this number. The closer we get to 100, the better these rates get. So just like when your SPY with the stock market or the Dow Jones or the whatever index that you look for to gauge the market, this is very similar here. The closer we get to 100, the better we will be. So today you see we were in the green. We were up almost a point. So this is good things. This is a good thing for everyone. So, but this is where we are as far as rates.
awesome. Awesome, awesome. I guess somewhat good news. And,
It's
just to
good
put
news.
things into perspective, even if you do buy a home now, because there's always a
Okay.
good time to buy, right? Yeah, the interest rate may be a little higher, but down the road, there's always going to be that opportunity to refinance at a lower
Absolutely.
rate because these rates aren't going to stay this high, but for so long. At some point, they are going to come down. So there will be that opportunity to refi. So,
You know where a lot of people missed the boat, and my best friend did this. Shout outs to Joe, Joe O. The opportunity to refinance your car loans during COVID was also an opportunity. My friend did that. I don't know what he changed, but I know he saved a couple of $100, during COVID. So there's always that opportunity to refinance. You're not locked in. Just like when you're financing a car, you're not locked in. You can, we do need to see an actual need, so the bank won't just let you refinance because, the rates are 0.005 less than they were a year ago. There has to be a need there. Um, but we can always refinance. That's always an option.
yeah, absolutely.
I have a new shirt coming next week, John. And I think I've said this before. You're going to divorce your landlord. From there, you date the rate
Take the rate,
and you marry the house.
marry
Meaning,
the house.
meaning the rate can be temporary. The rate is temporary. You're just going to feel it out. If the rates go, when they do go down, right? I'm going to put the positive energy out in the air. When the rates go down, you can refinance.
So
It's
Joe
never
is
locked
the
in.
matchmaker. Joe, you're the matchmaker when they date the rate, and I'll be the officiant for the wedding when they marry the home.
And just one other thing that I wanted to show you, John. So as you can see, right, the rates are still up if we're comparing them to COVID, which is what I hate that people do that because COVID was just everything that happened during COVID was uh, regarding finances was just a manipulation of the market, right? It's essentially what it is, right? Everything. That's why we're in the rut that we're in right now, right? So we show you the rates not to discourage you. We obviously, it's our business to educate you and get you into homes, right?
Mhm.
To build wealth for yourself and your family, right? And to be comfortable, to be comfortable. So what I wanted to show you guys that this is a house that my wife and I went to go see for a client of ours, right? I wanted to get a better picture, but everybody, of course, is when you want to take the picture, everybody spread out. This is a house that we went to look at in Clifton. It's a two-family. And if you can see the woman right there to the right, that woman right there was smiling from ear to ear because she was just uh, doing this to basically just see what other better offers she can get. But from speaking with her, she already had two offers that she had in her pocket that she was already going to make her decision with. And while I was here, I probably talked to about in total about 15 different people, and I was there for 10 minutes. So the market is still, whether it's a buyer or seller, it's all in the way you look at it. Whether it's a buyer or seller's market, it's all in the way you look at it. But there are still people buying houses. And that was the reason why I took this photo so you guys can see that. Whether it's 6.5% today or 5.5% the week after or the year after, people are always going to find houses. Why? Because rents are always going up.
Mhm.
And the average two bedroom, in Union County is almost $3,000 now.
It's up there.
It's up there. It's up there. So I just wanted to show you guys again. I don't want to think like we're educating, but then discouraging you by looking at those rates. It's at the end of the day, it's what fits your budget. It's what fits your budget.
It's a fact. That's a fact. So,
But that was my grandstand. That was my speech for today.
oh no, you got more. You got more. 'Cause we got to talk about reverse mortgages, Joe, because
All right.
I'm starting to get the calls um, from my more seasoned clientele or my
Okay.
wisest of the wisest clientele
Okay.
saying, hey, listen, we're of age and our house is paid off. And you know what? We thought our house was worth some money, but since COVID, we got a lot of equity in our home.
Okay.
We don't necessarily want to leave. We don't want to sell our home or anything like that. We like it here. But, at the end of the day, like, can we leverage the equity in our home and until, you know, someone else comes knocking on the door and asks us for another assignment and you guys can read between the lines, what, and they keep getting these letters about reverse mortgages. And then on the flip side,
You mean the commercials at 3 o'clock, 2 o'clock in the morning? Those?
those commercials, those
Gotcha.
commercials. So what's the meaning behind those commercials? And then let's tap into, well, what happens when that reverse mortgage comes to an end and now the heirs are faced with a property that was left to them, but there was a reverse mortgage tied to it. So let's first talk about the reverse mortgage product, Joe. Take us through
Well,
it.
as always, you should always seek advice from a professional. The information that we're providing is just for informational purposes only. You should always take advice from your licensed accountant or financial advisor. All right. I can help you with the process, but if your financial advisor or your tax accountant is telling you different, then maybe that's a piece of information that you're paying for that I would heed on taking. So just to give that just to put that out there.
Yeah. And that includes your
But
attorney as well. because we're
And
not.
your attorney.
Yeah,
And your attorney, yeah. But I deal with the first two more often than not. So it's funny you bring this up. I actually have a slide for this, John.
love it.
Wow. Okay, so you guys can probably you've probably heard the term reverse mortgage, or you might have heard the term HEMA. So what this they're basically the same thing, right? Reverse mortgages are essentially, like John said, the ability for someone over 62 to be, and I'll go over more detail in that, to take some equity out of their house that they're comfortable where they live. They don't want to move. They don't want to start from scratch with a new 30-year or 15-year term, mortgage, um, and they want to take some equity out of their house, right? So there are a lot of myths out there about reverse mortgages, right? Um, and these are some of the the top five that I could find out there. All right, or the top four, excuse me. So the first myth: the lender owns the home. They do not. We do not take possession of the house. We're not. All we doing, like a standard mortgage, is we're putting a lien on the house for the amount of equity that you're pulling out of the house at that time. All right. So just like a standard mortgage, you buy a house for 400,000, you put your down payment. The remaining balance is what we'll put a lien on the house, just like your solar system that you may have on your roof, or that that incident you have with the construction guy that end up putting that doesn't feel that he was paid accurately, and they put a lien on your house. This is all the same thing. All right. Okay. And then the other myth is that the house has to be free and clear. It does not. It does have to be paid off with whatever funds you pull out of the HELOC. I'm sorry, the HELOC, it's similar, out of the reverse mortgage. And the remaining funds are what you're actually going to be using. The funds are non-taxable. So it's actually tax-free, the money that you're pulling out, because it's considered a loan. You're not making profit on anything because it does have to be paid back once you sell the house. Um, and I can't purchase a home with a HECM. So let's say, and I have some more information on that, right? You can you can actually buy a house, sell the other house, use whatever amount of proceeds you want to pull out of your own pocket, plus what you pull out from the HECM or the reverse mortgage to purchase another house. All right. So those are some of the myths that I wanted to debunk first. All right. So what are the benefits of a HECM or reverse mortgage? All right. Well, first thing, like I said prior, you do have to be at least 65 years old. All right. The funds you receive you can actually receive them as a line of credit. Okay. You can get it as one lump sum or a combo, a mix of both. Okay. There's no FICO or DTIs. That's one big difference between a standard mortgage, right? But there are some credit income guidelines, right? And every every loan is different. There's just like your fingerprints. There's no reverse mortgage that's identical from your neighbor. We'll put it right from all the neighbors in your complex or what have you. It must be your primary home, and right now the max allowable is 822 375,000, and this is an FHA insured mortgage. So there are a lot of guidelines. There was a lot of these types of mortgages that were done incorrectly back in the wild cowboy days in 2008, 2007. This is this is regulated. Um, it does give you the option to right size. That's something what we were talking about in the previous slide. So let's say you have a house that's worth 400,000, it's completely paid off, but you want to downsize, right? You can use this HECM or reverse mortgage to actually buy a house that costs a little bit less. All right. So it's, all the kids are off to college, or the family's already living on their own, and that 5 bedroom, 4 bath house is just way too much. The lawn care is too much to upkeep, and you want to downsize. So you can actually use the funds that you're pulling out in from your future sale to buy another house that's a little bit smaller, right? If you want to downsize. And then again, the biggest myth is that once, like you were saying before, once the seller pays off, the bank just wants the house. You can work it out, but this is where you want to bring in your attorney, your tax advisor, financial advisor, as far as what's going to happen with the property once that day comes where you unfortunately pass away.
Hey,
But
Joe.
you don't have to pay it off until then.
Okay. Okay. Now, Joe, I just want to go back to these benefits again.
Go ahead.
So you eliminate the mortgage payment, but you still have other payments or debts you still have to be held accountable for, which is
Correct.
the taxes,
Your
homeowner
taxes,
insurance, and the HOA fee. So I want to
if
make sure
applicable,
we're
right.
clear.
Correct.
Just because you're taking out a reverse mortgage, it doesn't mean everything goes away and the equity in the house takes care of itself. There are other things that
That's right here on the first line. I think
Yep.
I think you caught it. I missed it. I'm sorry.
No, that's fine. But that's one of those things that people assume, and then
Yeah.
they're getting
Oh
these
no, it's not.
bills.
Yeah, yeah. You're still liable for your utilities and the things that you just mentioned as well.
Right.
Yeah, the
Um,
water bill doesn't go away.
yeah,
The
yeah.
city
You're
doesn't
not
care how
scot
old
free.
you are.
Yeah, you're not scot free. I mean, what they say, two things you can't escape: death and taxes. Right? You
Taxes. Yep.
got to pay taxes. Um,
Absolutely.
the other thing, you have lump sum monthly payment. So monthly payment. Does that mean you can get a distribution every month of a small portion based off of what you've taken out?
It's all what you work out with the bank. It's all now at my bank. We have a particular department because it's easy and kind of complicated at the same time.
Okay.
So we actually have a specific department. I would hold your hand during the process. Answer, that's what my phone is here for. Um, I would hold your hand, walk you through the process, but we have one specific department that would handle the process itself. That's where, that's the bank that I work at. It can vary from one bank to another. The process is the same, the qualification is the same, but the way that it's going to get done on the back end may vary from one lender to another.
Okay.
And as you know from working with me in the past, the the actual process is pretty easy over here. But things come up, right? Things come up.
All the time. All the time. But we get through them. And I guess the last thing, which is probably most important for those that want to downsize, it's a great opportunity to use this product to downsize by leveraging your equity. And that goes back a couple of episodes where we talked about refi, cashing out, purchasing, another property.
I'll give you an example off the top of my head. So let's say you have someone that has a $400,000 house. It's worth 400, right? It's completely paid off. They can sell it today, move to Boca Raton, and you know buy whatever it is they want to buy down there. But they want to stay in the particular area where they're at right now. So they can sell it for 400, pull out a HECM mortgage, right? Reverse mortgage. And let's say they want to just buy the house outright. You have that option, but if you don't want to, you want to put a good amount of savings in your pocket, you can use a portion of the HECM loan to buy the new house that you're going to downsize to and use some of the proceeds of the house that you just sold, and whatever the difference is what you can actually use as an investment or um, as funds to use during your retirement.
Mhm. That's awesome.
So just say 400, use 100 of the sale. Now you're down to 200, and the LTV varies from one loan to another. Um, but let's say for just instances, you'll use 300, 200 of the HECM, 100 from what the sale, and then that extra 100,000 you can profit.
Got it.
Not to say profit. Use for future savings.
Got it.
With the rising increase of everything right now, a lot of people are going through, and I think this is why you wanted us to have this video today, because you know this inflation thing is quite quite amazing.
Absolutely.
I went to get some chicken, half a chicken with plantains the other day. I remember when I was lived in Queens, half a chicken with, and I haven't had this in a long time. Half a chicken with plantains was $4.75. I paid $10 for half a chicken with French fries I'm sorry, with plantains the other day.
True story.
And I'm assuming this is why you're getting these calls.
Yeah. True story. Fun fact. I know how to make fried rice now. All right. Because that's how crazy these prices are at a Chinese restaurant.
I remember you'd be able to you could go to a Chinese restaurant for $18. It would feed two. Now it's an average of, and I eat a lot of Chinese food, unfortunately. I eat a lot, I try to eat the healthy stuff, though, steamed chicken, brown rice, and my wonton soup. Um, if you know me. Um, Now your average is almost $30 to
Get the
feed
prep for me.
to feed two, not a family, just to feed two.
Yeah. That's one meal. Keep going, Joe. Now I'm getting hungry and I'm depressed at the same time. Keep going.
But this is basically how it works, man. Um, Again, the question you asked before, what happens when the owner sells? The owner unfortunately passes away while this loan or this equity that you pulled out of the house is still in play. This can vary on how you may have set up your will or what have you. If you decide to, what most people believe that works and what does work is the bank will then repossess, but they'll end up selling the house, take the share of what the remaining balance was from the sale of the house, and then from there, again, that's all based on how you have your will set up and how you've had that all set up with your family. But that's where your financial advisor would come in, or your attorney.
Right.
No
Yeah.
one wants your house. I say that every week. Nobody wants your house, but the person that you're selling it to, the banks don't want your house. It's too much of a headache. It's too much of a liability.
Yeah. Banks want that interest. That's what they
They
want.
they make money off of interest.
Yeah.
Absolutely.
Let me off that interest. Again, it's not one of those topics you want to talk about, but
But we made it interesting. We made it
exactly. And
interesting.
there are benefits which you have here on the screen. There are benefits. You can downsize. You can.
I think the downsize is the primary thing that a lot of people don't talk about.
Mm-hmm.
They think that people just, well, they'll take 200,000 out of the house, put it in a bank account somewhere, and they'll just use that money until they pass away. That's not always the case. You can
Right.
use this money as an investment tool. You can use this money to pay off that you know that car that you still have 5 years to go on a lease or a finance. You want to invest some money in the stock market. Again, always seek professional legal advice.
Yeah.
um, or if you want to downsize to a better property or a nicer property that fits your needs.
Yeah. And for our seniors, many are on a fixed income. That lump sum that's spread out across monthly payments, that gives them some additional monies to live off of each month.
Absolutely,
Especially in this day and age.
absolutely.
So awesome.
Eh, yeah, go ahead.
No, I was gonna say, I mean, it's good stuff.
It's that
We
simple.
don't think about, which is why we're bringing things like this to the forefront, man. Thinking outside the box.
Absolutely, that's exactly. And and like I always say as well, it's whatever your risk tolerance is.
Yeah.
So is this something that you feel comfortable doing? You'd have to, talk with your family, talk with your advisors. There's always different options. It just doesn't have to be the sale of the house.
Right. Joe, once again, man, great session, dude. Great session.
Absolutely.
Appreciate it.
Always providing some real estate keys.
That's it. That's it. Real Estate Keys. That's the name of the show. That's the name of the game. And hopefully you guys are walking away with a different key this week. And in this case, it's the reverse mortgage. So whether you're young or old, this information can be shared amongst family members, whether it's for estate planning, whether it's, a way to plan out your life financially, between now and decision day.
Exactly.
This is what this is all about. Joe, how do they reach you, man, to get more info about reverse mortgages?
908-669-9091. DM us here on Instagram, Facebook, or YouTube. Always remember to subscribe and like the videos if you found this information helpful.
Without question, John
Yeah,
Johnson, 908-338-0639. YouTube, Facebook, Instagram, LinkedIn. We're out there. We're out there. We appreciate you guys. Joe,
as
thank you, brother.
always, thank you very much, guys.
Good night, guys.
Have a good night.